Morning, Steve Free in Chicago with the morning grain comments. Well, today is USDA report day, so at 11 o'clock we'll be back with a video explaining what the USDA did or did not do, and then the market reaction. I think that most people believe that USDA might keep U.S. and world soybean and wheat data unchanged from last month, but there is a chance that if they want to, they could lower the South American corn crops, they could raise China corn imports, and they could raise U.S. corn demand and lower the carryout. The average guess for the corn carryout is 1370 versus 1502, but I think that many are using a number like 1200. So anything below 1370 could be a very positive market quick reaction like we did the last time the USDA put out some numbers. I still feel that when you plug in whatever carry out we have this year to next year's U.S. corn and soybean acres, plus a trend yield, minus demand, you're going to come out with a carryout next year for corn and soybeans here, 22 that is lower than the carryout this year. So the question shifts from now until is D's corn and November beans undervalued given that outlook. So that makes weather that much more important. Right now we're seeing some dryness in the plains, and as the days progress, we might see even some dryness in the western corn belt. Most meteorologists are saying that, let's say after July 4th, the U.S. plains and western Midwest could be drier than normal. The key is whether how long the dryness persists, and if there's any warmer temperatures with that. That suggests that east of the Mississippi, weather conditions could be okay. So it's not necessarily a repeat of 2012, but it could be the fact that we may have final corn and bean yields below record, and that's what we need in order to increase the carryout and satisfy next year's demand. Otherwise, globally, Canada's dry, Western Europe's dry, Brazil is dry, Ukraine, we're watching that weather pretty closely, and Argentina's wet, and the wetness in Argentina could be slowing harvest there and lowering some of the quality of their crops. We'll be watching pretty closely China. There was rumors yesterday that China was interested in old crop U.S. corn and U.S. hard red winter wheat. May have been more of trying to justify yesterday's trade in corn and wheat than the actual fact. We also note that when we look at the lineup in Brazil, they've got about 14 million tons ready to load in beans, and they've loaded about almost 4 million tons to date. And we did see that the Argentina lowered their soybean crop while Brazil raised theirs fractionally higher. And we do think that at the end of the day, the Brazil corn crop will be lower than what the USDA is saying. So again, we'll see what the USDA has to say. We'll look at the market reaction, and then we'll start trading global weather and supply and demand numbers and planting conditions across the U.S. As always, this is my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. Remember, always treat people like yourself would like to be treated.